Hi folks, David Waring here again with InformedTrades.com. I'm going to take a minute today to answer a reader's question that was sent in, which is why does the Japanese yen tend to rally on bad news or on things like the subprime crisis? And the answer to that question comes down to interest rates. Interest rates in Japan are very low in comparison to the rest of the world. So because of that, investors will borrow money in yen and buy other assets which they expect to earn a higher yield on or higher interest rate on, or just a higher yield in general. And this may be other currencies such as what's referred to as the carry trade, when traders will sell a lower yielding or lower interest rate currency pair and buy higher yielding or higher interest rate currency pairs. So pound yen is a good example of this. You take the yen, sell that, buy pounds with it, you're earning a higher interest rate there, you earn the carry, it's called. So that's what's known as the carry trade. But it goes beyond currencies. They may sell those yen and buy U.S. stocks. They may buy some of these collateralized debt obligations or mortgage-backed securities that we learned about in some other lessons, that carry some of that subprime debt. So when things go bad, investors become much more risk averse, not wanting to take on risk. So they scale back those positions that they've taken on, either because they are just becoming less risk averse or more risk averse, or because they have to, because they're forced to close out those positions as a result of margin calls on losses. And what that means is they have to buy back the yen that they borrowed, which is going to drive the value of the yen up. It's going to strengthen the yen as that demand comes into the market kind of all at once. So that's why you do see the yen rally or strengthen on the back of bad news, such as what happened with the subprime debt. Anytime people are becoming less likely to take risks, you're going to see the yen rally normally. Okay? So that's the answer to that question.